All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If those of you who are with me this morning can hear me loud and clear, do me a huge favor, drop me a 1 in the chat. Let me know that you are ready to go. I think it would help if I actually activated the chat. So hold on 1 second. All right. And I think we should be all good now. All right. So if you all could drop me a 1, let me know that my chat is working. All right, Kay, I see it. I appreciate it. Thank you very much. All right. Okay, so let me exit out of here, right? And as always, as we prepare for our trading day, right, let's make sure that we have a strong foundation and that we take massive action. Let's make sure that we're accepting all possible losses before entering a trade, preparing us for any outcome, and let's remind ourselves to center ourselves, our body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, and trading skills and intuition. And let's imagine that our trades are successfully materializing. And along the way, let's make sure that we are obeying our trading strategy, avoiding decisions based on greed or fear. And let's never look back or stop once our trade has commenced, right? So if we are all ready to abide by those rules, let's dive into the charts, right? Let's first check out the fundamentals. Let me bring up my Forex factory. And so we'll go to trading economics first, and we can see that euro inflation slows as expected. So the annual inflation rate in the euro area slowed to 2.8% in January from 2.9 in December, in line with market expectations. Prices slowed for food, alcohol, and tobacco, non-energy, industrial goods, and we're down for energy while services inflation remains steady. Meanwhile, the core inflation rate eased to 3.3%, the lowest since March 2022, but above forecast of 3.2. So your core it eased, but still was a little bit above the forecast. We see that as far as the Bank of England, right, which is due for rate announcements, that they are expected to leave their rate steady for the fourth time. So you can see that the majority of these central banks are coming into alignment with their decision making. So not raising or cutting, but indeed holding rates, right? So if we go over to the Forex factory, I want to go back to yesterday. When I go back to yesterday's session, and CPI for Germany came through at 0.2%, so inched above forecast there. And then here we can see that the ADP non-farm payroll, ADP non-farm employment change, which is the private sector jobs report for the United States, missed forecast. It was 148,000 projected, came in at 107, so it was definitely off there. We see, right, that a lot of times that's the precursor to what's to come. For non-farm payroll on Friday, which is the big jobs report that everybody's waiting on for tomorrow. And so a lot of times it falls in line, sometimes it doesn't. So we'll see. We've got CAD GDP that came through at 0.2%, so that's good for the economy. Employment cost index Q over Q missed, came through slightly lower at 0.9, right? Oil inventories, right, down, forecast point 8 million, came in at 1.2. So we'll take a look at oil as well. And then we know that yesterday they decided to keep the federal funds rate steady. And in regards to what Powell had to say, U.S. Fed indicates March are likely too soon for a rate cut. So if we come over to trading economics and take a look at the DXY, you can see that the dollar index held above 103.5 on Thursday, hovering near 7-week highs as the Federal Reserve Chair Jerome Powell poured cold water on bets for a March interest rate cut. During the Fed's press conference, Powell said that a cut in March is not the base case and reiterated commitment to maintaining rates at their current level until it is clear that inflation is moving towards the 2% target. The markets now see a 38% chance for a Fed rate cut in March, down significantly from 89% a month ago. Right? So once again, right, we don't like to bet against the Fed. Investors now look ahead to the weekly jobless claims and the ISM PMI reports on Thursday, as well as a highly anticipated monthly jobs report on Friday. So the dollar strengthened against most currencies, but it was weakened versus the Japanese yen as troubles at regional U.S. lender New York Community Bank Corp prompted a rush to safer assets. So we saw that yen move. We know our dollar yen setup that we've been sitting in for quite some time moved in our direction for the 80-20, right? So we know we had the technical case for it, but as we always say, it's a combination of technicals and fundamentals, and we needed a catalyst. You never know what's going to come to make that market move, right? That's why we like trading the zones. So who knew? Regional U.S. lender, New York Community Bank Corp, right? So go figure. But technically, we had the position right in that regard. So let's move on and take a look at that DXY. First of all, any questions regarding the fundamentals before I move over to the technical charts? No, Troy, appreciate it. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Doing pretty good. Doing pretty good. Can't complain. Another awesome week, right? Glad to be alive, as
Yes,
always,
sir.
brother. Indeed, indeed. So anything fundamentally you're tracking? We know we got that move in the yen yesterday. Crazy how these occurrences happen to make
Right in
price
line,
move in our
man.
direction. Wasn't it something?
Right in line, dude. Um, no, that's it, bro. That's it, man.
Yeah. Yeah. Pretty clear cut. We know we were set up to have a busy back half of the week. And like we were talking about yesterday, you just have to be patient, right? When that market is kind of stagnant, moving sideways, you start to second guess and question yourself sometimes. You can't do it. Can't allow it to happen, right? You have to stay steadfast. So let's take a look at that DXY. Look, we're getting that bounce. Getting that bounce, man. Getting that bounce. And, can't say it enough, right? Candlestick formation, especially higher time frames, sign language of the Forex market, right? We had a morning star set up a long time ago on the weekly, and it's been moving ever since, right? So we've got dollar strength coming into play. Look at it moving up, okay? So we got the dollar bulls that are out right now, right? So look at the DXY. So we'll continue to keep an eye on that. And I'm going to jump into the charts. First thing I want to take a look at is this Aussie CAD, because we had a larger overall play and then we had a smaller play that missed. So here on the 4, right? So this is moving bearish. Just look at it on the daily, right? And we're coming back in at 87.56, right? So on our 4-hour, we had this spot on the money, right? 80-20 play continued. But what we were looking for at this level, right? Once we hit that TP1, we saw there was an opportunity on a lower time frame for a smaller 80-20 correction that didn't play out. But what it did was it's on our 4-hour chart, that longer move, if you're swinging off that 4-hour, you've now hit TP2 at 225 pips, just about. Not quite there yet, but pretty much there, right? So the larger play made his move to the downside, and then this was the 1-hour smaller play that we were looking to see if we can get that bounce off that area, and we didn't. So that just continued down, right? We moved up. We almost got that 382 there. That's where I got stopped out a little while ago that we were talking about when that price came back down, stopped me out. because I had adjusted that stop. We talked about that a while ago, but it just continued to the D extension, right? So higher time frame controlled the lower time frame, and you can see it turned over. We actually hit the D extension, which on the smaller play to the upside, it ended up hitting the stop prior to, right, that 85 pip target. But we almost got there, but we reversed out. Right. So that one was a bummer on the shorter play, 11 pips from there. But the overall 4 hour, right, came down and hit that second target. I was thinking a deeper correction before continuing down on that 1 hour play. And we did slightly, but then it just continued to move down. So that's where we are on the Aussie CAD moving bearish. Any questions on that? It's a big move.
No, sir.
All right. And you guys can see, right, the pros and cons in regards to stop loss placement, right? Using the wider stops, trading small, accumulating the pips, right? Trading small because we know that we can add to the position as it moves in our favor versus having a tighter stop per se on a setup like this where it got whipsawed all over the place before it made its move down, right? So does it take a lot of patience? Yes. You know, does it, do you develop that overnight? No. It takes time, right? It takes time. Yeah, it is beautiful, right? How that played out. That's one where you trade your zone and you just walk away, right? So again, that played out, larger move, smaller move, didn't give us the deeper correction like we thought, right? We came 11 pips shy of that before it turned back over. So that's that on the Aussie CAD. I want to take a look at may come back to these Aussies in a minute, but I want to jump down to the CAD yen because there was one that we an appropriate stop loss protects your account. It does. It does. I don't there could be a debate back and forth as to whether to keep a wider one or a tighter one. That really depends on you and your trade psychology. Uh, but the debate as to whether you should have a stop loss at all, I think it's a ridiculous debate. use a stop loss, protect your capital, right? Protect your capital. So on this CAD yen, right? So all in all, moving along, we're getting that correction, right? So we've got a pretty decent move now, right? So we're above that 108.34. We may be checking back to that level. But there was where am I looking here? There was a setup, here on the 15 that we had marked up during the ritual, and we can see that one played out, right? So again, right, even the target one on the 15, just playing that correction. We know overall, right, we've been moving long, right, on that CAD yen, but yes, that's a larger swing play, and we are going to have corrections. And you can see back on this move back down, especially with that safe haven move yesterday, right? We know the yen can act as a safe haven, which is what drove price, in that downward direction, right? With these yen crosses, which is what we were kind of waiting on. And that's what we mean by, trade your zones, use your proper risk management, use your stop loss like we just discussed, because we don't like you ultimately don't control the market. You just don't, right? And sometimes it's just a timing thing. So you can see here how this trade just collapsed, right? So that's through TP2, that's second target, and then it's just continued bearish right now. So we've got some corrective action going on with the yen, which is, hey, it was due. It was due. And that's just a free market for you. So they didn't even have to step in. Now, you guys remember during the ritual, we were talking about how, right, the latest ABCD wave completed, and now at least on the 1 hour, we were looking for a correction, and we talked about, hey, if we can get it correct back into our buy zone on this 1 hour, we've got 108.34, that daily level that it could be testing there, right? So if you were looking to play a C to D move and continue long against the yen after this correction, this may be an ideal area to pay attention to, right? So this year just kind of letting it move. We got up around the 118 zone, okay, there on the one, but the move that was drawn up was on the 15 for the short off the 80-20. Okay, so let's let that continue to correct itself, and then we'll revisit it once we get down to that 108.34 level to see if we're going to get a reaction. Here it is off the 4. Okay. All right. So that larger move, that larger swing, right? And now it's moving back down. So we've got some support there that is running into, but my eyes are on that 108.34 support level. Any questions on the CAD? Yeah. That was a nice move on the 15.
No, sir.
All right, all right. So let's move on, right? I want to take a look at the Euro Aussie. Okay. Patience, right? Patience, right? We found a support, right? Look at that V-type recovery there, right? Off of this weekly time frame. Okay. So yes, you're gonna have times where you're correct, and sometimes the market gets crazy, but hold your trade idea, right? Hold your trade idea. So right now we've got to enter the outer trend line break. We got a correction on this daily, and now we're moving back long against this Aussie. And you can see here, everybody, look, the push deep in the zone. Okay. So we push deeper than that 61.8, right? But as long as it doesn't take out that A, it has no choice but to go your way. And here we are with this swing. So what do? We got a 786 retracement. We say, hey, we've got enough momentum on this current fib to get us on the 4-hour to a 127 extension. It's how it goes, right? It's how it goes, right? Let's not second guess ourselves. Once we figure out our risk, we put our stop in, right? So how we talk about, you know, not pulled that out already, the credo, but just not once we set that trade up, letting it go, right? Letting it go. We're protected. Our backside is protected, right? Stops below the A. Here we are on the 1, right? Okay. See that there? So now, look, we talked about this one before, played out beautifully on the Euro Aussie. Okay. Hit the D extension. New AB boundary, we got a correction. Right? We got a correction. So if our bias is bullish, okay, we look for price to U-turn somewhere within this AB boundary. Okay. And that's why we use the wider stops with these larger swings, because sometimes it's just a timing thing. There are times, right, on some of the pairs that we've been keeping an eye on where, hey, it does get taken out. So it makes a deeper correction on a higher time frame, like a 4-hour or a daily, and your 1-hour fib that you may have, that A may get taken out, because of the deeper correction. We don't control all of that, which is why we protect our backsides. But if we can work hard at getting our overall direction right, look at the swing. Look at that U-turn. Okay. It's amazing how that happens, right? So we were looking at that break above that 164.79 level, and we got that, right? And we got that. So if we go down to like the 15, okay, and we zoom out, and we could try to find, you know, some price action for us to possibly uh, get involved, right? So that one's already going on the 15. Look at that. So you can see how this previous level out. Look at your 80-20, right? There's nothing wrong with trading small and giving your trade idea time to develop. Okay. So even on your 15, if you trade your 15-minute chart, you had a spot on 80-20, right? That corrected. Okay. Here's your swing in the zone. So even if you were a trader on the 15-minute chart, and a week or so ago we went over the math. Um, Even if you determined you did your top-down analysis and you said, you know what, I want to just make my living on the 15-minute chart. Okay. On the 15-minute chart. Follow me now, right? I'm going to do my top-down analysis, mark my support and resistance levels, bring them down to my 15-minute chart, do my best to determine a directional bias. If you said, all I'm going to trade on the 15 or 80/20s, or I'm going to trade because I love being in 3-to-1 scenarios, right? 3-to-1 scenarios, because we know on the 80/20s, you may not get that, especially if you're using a wider stop, D extension as your stop, right? So if we plug in a D extension here as our stop loss, like so, bang, and that's our stop. We know with a wider stop, we're typically not going to get a 3-to-1 to the 382, that first target, right? So going back, okay, follow me now, right? As you guys develop your trade plans. If we say, hey, this is our 382 target, then we know oftentimes on an 80/20 counter trend move, we're typically not going to get, you know, uh, a 3-to-1 back to the 382. We may get a 2-to-1, 1.5-to-1. Now, setting up to for a TP2 target, yeah, you can get there, right? But we know how price can react at the 382. But you can get that. But we know that trading C to Ds with the trend, okay, trading C to Ds with the trend, okay, which that's an 8-6 retracement. So our D extension is going to come in right here, this 118. We know that we can get 3-to-1 scenarios, right? Pretty consistently waiting for that deep correction. Everybody follow me on that? Drop me a 1 in the chat if you do. Okay. If we wait for that deep correction, then we know the math plays in our favor. So you may say, I'm going to be patient and I'm going to only play C to D moves, right? With the trend. Okay. So if my bias is bearish on a particular pair, for example, like the Aussies are moving right now, you may be looking for C to Ds to the downside. But if I'm waiting on this correction here, so if my stop is below the A, right? And I'm playing that swing to the upside, okay? This can put me in a scenario, right, where there's drop there, right, 40 something pips, right? And we're going back there, right, 217, almost 2-to-1 or whatnot. But for the most part, on these deeper, you humbled yourself and said, I'm not going to get over anxious. I'm only going to play, right, those C to D moves. You would set yourself up pretty good. And we already know when you're in a 3-to-1 scenario, I only have to win 3 out of 10 trades, 30% of my trades to make money. And we work the math out on that. Right? We worked the math out on that and how to get a target, right? How it was at 30%, 167 trades, and then it went on down from there as your strike rate and your win percentage improved, right? So that's just bringing it all together, bringing it all together. The two primary setups that we like to look for, 80/20s, and then those C to D moves after deep correction with risk management, right? And how to progress towards a goal. I want to double my account. I want to, make an extra $1,000 on this account. Well, how are you going to get there? That's how you do it, right? That's how you bring this all together. And then you just let it go and you live with the results, knowing that I have an edge in the market with my zones and I just have to allow them to play out. Right. So that's how you can do that. Any questions on that? Ryan, anything to add to that?
No, man. That was perfect breakdown. Appreciate it.
Awesome. So that's where we are on the Euro Aussie, right? That is moving long right now. Joy said you've been in this since 1-4. It's moving for you, right? It's moving, right? Dropping those sevens in the chat. Joy, being patient. You know, you've been at this for quite some time. It pays off. It pays off. You know, and if you're in this swing, right, you just it comes down to the math, right? Knowing that if I find enough of these, things are going to go in my favor. I'm not going to win all of them, but you understand from the beginning that you don't have to. You don't have to. Right? Okay. So that's the Euro Aussie. I want to take a look at let's take a look at this Euro CAD. All right. This is just kind of it's doing a dance. Right? And so I've got this set up just as a range, and right now we're holding below this range. So if we get back above 145.63, then we may be looking to move back to the top of the range. But right now we're holding below, right, on this daily. So if we move on down and we take a look at the 4, we can see where we are. Okay. Still trying to get to that target that it just missed, right? Just missed it, ran into daily resistance there, right? Just shy of that. So some of you may have taken profit and been out of this a long time ago. But for those who are still involved in this position, right? If we get back above that 145.63, right? That's why marking those levels from the top down are important. If we get above that level, then this one is still in play because technically we haven't gotten to that target. We came up just shy. Yep. Yep. Oh, I hit yesterday that you had. Okay. Good job. Good job on that. So that's good. So if we get that break back above, we may move for a higher correction, right? Because that was pretty shallow and it got range bound on us. Okay, so if we continue to see some euro strength, just keep an eye on that one, right? You wouldn't take it now. You have a good landmark, right? Let's get back above 145.63 to entertain that. All right, that one's been all over the place. But let's see what happens with that one. All right, because right now we've got past support playing future resistance, right? We definitely need to get back above that to make a play. So that's the Euro CAD. Moving on, taking a look at this Euro Swissy. Okay. Looking at this from the 4 hour. Okay. We already had a decent pullback. Okay, so this one's kind of just bouncing around doing this thing. I'm wondering if this one is going to find support and try to move back long, right? See how we got that rejection off of that 92.54 level? And then you can see here how we moved, right? Made that move back down. Okay. Swissy is a safe haven as well. Okay. And as a result of what happened yesterday, fundamentally, right? Saw some strength. So now I'm wondering, right, if we get down, I'll totally get it if we move all the way down and we end up coming to that D extension, right? But that's sitting below that daily support at 92.54, right? So what I am going to do is I am going to, because we're seeing a little bit of euro strength, what I'm going to do is I'm just going to run this trend line down like that to see if we find some support, to see if this creates a higher low, right? So I'm super interested in this one because of right here. So we come to this daily. My stochastic is in the buy zone, right, on the daily. So I'm wondering if this is going to hold and form a support, right? Definitely be a good sign if we get support to form on this daily. And I wonder if it's going to hold and push higher, at least back to 94.72. I'm not sure. So I need to wait and see on that because we can see here, right, how we came into that 382 narrowly. You can see here, this is the Euro Swissy, 80-20, a past 80-20 that just collapsed, right? So we flip it over, but I'm wondering if support is going to form there. So I don't have anything on it now, right? I don't have anything on it now, but we're going to see, right? Because this is starting to stall out a bit. Ryan, what do you think about this setup?
That one I'm out of right now, bro. I'm
Hmm.
indecisive on it as well.
Cool.
Um, I I follow you off the daily time frame and looking at that potential move to the upside.
Hmm.
Um, yeah, Swiss has just been interesting as of late, so
Has
I just
been.
been sitting watching it.
Yeah, even coming out of the end of last year. So I mean, like I said, I got my trend line drawn on that. I'm wondering if that's going to hold or if it's going to come back to at least retest that support. So we're on the wait and see on the Euro Swissy. We'll leave that there for now. Um, Euro GBP. We know we had an 80-20 setup on this
I'm
one.
sorry.
Hmm.
Um, I did a play off the 15 minute on eChef. I got in at 93243, and on the 15 minute I found support at 93082. It's moving sideways, but it had gave a little push.
So
So
you're taking it long?
yes.
Yeah. Yeah. So you got some support finding, you found like right here, right?
Yeah.
Finding the lows. So that's I'm wondering if that's gonna stall with the price action we see today. The New York Open, we'll see what
Okay.
happens on that. But that one, I don't I totally understand your thought process on taking that because I'm sitting up there, I'm kind of thinking the same thing. I know it's moved funny as of late. Um, but like from the higher time frame, right? We know that that's already sitting pretty low. So in my mind, I'm like, this is just a correction, right? After that move up. I don't know if that's going to push to make a lower low. I'm thinking that's going to hold in my mind, but I'm just waiting on a little bit more evidence. So for you to drip a trade in at that level, it's definitely worth a shot because you double bottomed right here,
Yep.
right?
And then I at that time that I entered the trade, I had threw the MACD on, so it was the lower end climbing up. So that was the other
Okay.
reason why I got in.
Yeah, I'm thinking some exhaustion too. I mean, if you take this down, right, to a lower time frame level, start moving to your five and stuff like that. That's making higher highs and higher lows, right? That's a clear double bottom, and that's reversed out. No doubt about it. What'd you say you got in at?
I am in at 093239.
So you just took it.
Yeah, and then plus my broker is like about 10 pips difference than
Oh, I got you.
Smart Trader,
Yeah,
so I'm a little bit
with the
lower.
spreads. Okay,
Yeah.
I get that. So yeah, I mean that's making higher highs and higher low, for a day trade. So that's moving up, right? That's moving up. So let's continue to see if that makes progress. But that's a good early entry there. All right. See if it continues for you, right? That's a low risk setup. That's a low risk setup to take a shot at that. It's a lot to gain to the upside if that continues. If it doesn't come down and take out that double bottom, you're in a beautiful position there, Joy. Great work.
Yeah, I
Great
got
work.
my stop. I literally got my stop right up underneath that A. So yeah, I ain't gonna lose too much.
No, no. That's worth it. That's worth a shot there. I like it. Appreciate you sharing that. All right. So let's take a look at the Euro GBP because we were looking at an 80-20 here, right? So we've moved below that zone a bit, right? We got that initial move up out of the gate this morning at 4 hours. Stochastic is in the buy zone. We'll see if it's gonna hold, right? We'll see if that's gonna hold. It's an 86 pip take profit. We know that that's a slow mover. Let's see here on the 15. There's that correction. So I wonder, uh, I wonder if it's going to take all of that back or if it's gonna find a low. So we'll run it right off this this impulse leg there. Man, we don't even have a new. That was so strong. It took it out. So we need to wait on that to correct. What does that look like on the 5? There it is right there. So I wonder if that's going to move down and take out everything on that. It's going to pause. You say you're waiting on the pullback on the 30. Okay. On a higher time frame.
Only because you gotta look like it's a swing forming on the 1 hour.
Mm-hmm. Yeah, this is wild. Who knows? Who knows? Let me look at this today. That was yesterday, and we didn't come in today. This is at 7. Okay. Let me. Right. So they held at 5.25. Daily speaks at 7:30. Okay. So I was wondering why we saw this move playing out like it is, right? So they came through. We saw the reaction. Came through. It held at 5.25, and then we'll see what the forward guidance is from the Bank of England. So we'll see how much that wants to pull back and see if we get a continuation on a Euro GBP. Here's the Euro Yen. Let's take a look at it. All right. So this is a key level here. It's 158.54, right? So we can see past, right? Resistance becoming future support. You can see right here where we've tapped into this level before and held, and now we've coming back to retest. The daily stochastic is in the buy zone. So this level is a level of interest for me. This one's a little bit of a tricky one, right? Because you got a 4-hour 80-20 where we didn't get a 382, but we have now double bottomed at this level and we're getting a reaction. Our 4-hour stochastic is in the buy zone as well, right? So this has been a nice move and a correction down after some drawdown, but now we're at this level, okay? And the reason why I'm focused on this level is because on the 1 hour, we have been waiting on this to come down to this zone. This is what we were talking about doing the ritual, kind of like that carry-in where we're looking at that key level to be hit in our buy zone. And you can see here at 158.54, that daily level on the 1 hour, we've got past resistance becoming future support. We're at a 61.8 level, and we're starting to get a move to the upside. Okay, we're starting to get a move to the upside here. So if we break it, we close back above that 158.54, we may be starting to see a U-turn, and we may get higher highs and higher lows out of that zone. Okay. So, and I'm overall bullish against the yen. I know we had the situation yesterday where we saw the safe haven effect kick in with the yen, but to me, it just pushed it down to a correction point. So I am going to watch this one closely. Some of you may be in it long already, but I want to see, right? Can we get a further push up? Yours activated 158.60. Cool, cool. Like, well. Right? It's moving in the upward direction. It's rejected that level. So I'm interested to see if we could push through, right? So we've got a high there. Okay. We got a high there, right? Can we drive through? If you're limiting in, this is your play, right? If you limit it in at that level, you got your stop below the A, let it play out. Right? You know, if you find enough of those to go in your direction, you've got an edge in the market, right? We just talked about that. So if we move up and get a correction, right? For those who aren't playing at limit, and if we hold, maybe we even get a retest of that 158.54, don't know. We look for that to move out of the zone potentially, but that is a key level. So after 1 hour, that looks like a good play. I wonder if it's going to sustain that momentum long. I think so. My bias is just so strong against that yen right now, but we'll see. Ryan, what do you think? What do you think on this play?
Yeah, so I am looking at that push to the upside. Um, it's going to be interesting to see
This level here.
how
Mhm.
far it goes, right? On this retracement in the short term, because we could get a pullback and then more downside action getting us to that TP1 level. So that's what I'm looking at. Pullback on the short term, around that 160, 169 level,
Okay,
and then potentially moving back down to complete that 80-20 on the four.
got it.
So
Got it.
that level, now if we break that 160, 169, then looking at potentially some longer term moves to the upside. But
Mm-hmm. Mm-hmm.
yeah,
Okay. I like that idea. I like that idea. But then like we always say, Ryan, like it depends on which chart you're playing, all
it's the
right?
truth.
Because over time, your risk and your strike rate is going to play out,
Yep.
right? So if you're playing and if you're holding a 4 hour 80-20 play, then if it is just a temporary correction and move back down, you're gonna win it. If it's a sustainable move from this level, you're gonna lose it, right? So think about that. But it's the same. It's the same here. If you're playing this off of the 61.8 and you're expecting that to move to the D extension, if it does, you're spot on. If it's just a temporary correction of 160.16 and a correction that moves back down and takes out the A, then you lose the trade, right? But if you find enough of these situations on whatever time frame that you're trading, you're gonna have an edge and you're gonna make money. That makes sense? Yes, no?
Yes, sir.
It becomes a really, really simple breakdown. Yes, I heard a yes. Okay. Right. So just think about that. So don't, decide on your time frame and then let it play out. Don't worry about the rest. Right. If this moves down so we can move these levels down, we could take these 4 hour levels and bring them down to the one. Okay. And this is how we talk about higher time frames at time control, the lower time frame. So we know, look, if this is just a short-term correction and that 4 hour chart, that 80-20 is going to win out, then guess what? It's going to take your A out. Here's TP1, which is right at the stop. TP2 is below that. Okay. TP2 is below that. And so if it does move down and take out that level, right? If it moves down and takes out these levels, eventually, right, the 4 hour wins, but we know this TP2 is a 61.8 on the four. Guess what's going to happen if it's meant to continue long from there? It's going to U-turn. It's going to U-turn, and then eventually you're going to be trading ABCDs on the 1 hour time frame again, right? So that would just mean, hey, I was wrong on this one, but when price finally decides to make the move off the four and get long, then I'll get back in, and guess what? My 1 hour charts and my ABCDs will start playing out to the upside. So sometimes it's just a timing thing. And I hope that makes sense to everybody. I can't press upon that enough, right? To stick to your trade plan. You're not going to win all of them. You don't have to, right? You don't have to. You don't have to make every hit in baseball to be a good hitter. Okay. All right. So that's that on the Euro JPY. Any other questions on that?
No, sir.
No? All right. Take a look at this Euro NZD. So here you go, right? We can see, look at that same type of U-turn, okay? Same type of U-turn occurred on the weekly, okay? Move down for the sake of time, come into the 4, okay? Look at that, right? Marked this up long time ago, right? Beginning of the year, right? We saw that consolidation around that 61.8 zone, right? In this area, and you can see that we have now pushed along, okay? So this is moving in the upwards direction, okay? You see how, look, it danced around, but the overall, long-term overall, right? So it's gonna do its dance, but you see how we're within this capital AB boundary? Right. So it's going to move around. It's going to dance and do its thing. See, I took the A out and now we're continuing to move up. We got back above 177.40. Right. So it's still moving in our direction. Okay. Look at this moving to the upside. Look at this swing. Okay. Look at all the price action. Look at the 80-20 on the 1-hour chart. Right. So on the 4, it's saying, look, I'm long on the 4-hour swing. If I'm playing my 1-hour chart, I saw on my 1-hour, right? Say, Benny, I saw my 1-hour 80-20 and I played it. Would you have been right? Yes, you're right. Right? Deeper correction, right? Look at the move. Look at the price action moving up, which is what we saw on the 4. And then we saw the huge correction. Well, if I'm a 1-hour chart trader, I just made money off the 80-20. Okay. Now what's going to happen? If this continues to move long, right? Like that 4-hour off that 4-hour up AB boundary, okay, moving bullish, then guess what's going to happen? So we were just talking about the last pair, right? And what will happen is eventually, if on that EJ, it pushes down and gets stopped out like this. So say it moves down and it gets stopped out, right? That's what we're talking about in regards to that EJ that we looked at. Like, hey, you could get stopped out. But look what happens. Eventually, once that deeper correction on a higher time frame like the 4 is over, it'll reverse, right? You can see here, 80-20, back to the upside. That's our 80-20 zone. And as it continues to move long, it'll take our A out. Okay? It'll take the A out. And then these fibs will be making a move to the upside. So this will continue to progress like so. It'll take that A out from this down fib. And then guess what? We'll be trading up ABCDs. And then our 1-hour chart will be back in alignment with the 4-hour. Okay. This is moving down because of the deeper correction that occurred on the 4, right? Higher time frames control the lower time frames, right? So we moved down. We took that A out because of the deeper correction on the 4-hour chart. But now, right, we see a continuation long, right? So this was that deeper correction. See how it took it out? Okay, that's why I put those there, right? This reflects exactly what happened on the 1. Now, this overall move is trying to continue long. Right? So if we take these out here, see how we're trying to get back long. So eventually, right, if this is going to continue, if we get this to continue, it's going to take this level out. Okay. And just like how it took out our A as it moved to the downside and we flipped the fib over, once it takes out this A, moving to the upside, we've got fibs moving up. And that's just how it moves. Right? That's just how it moves. So we'll see. We shall see. Any questions on the Euro NZD? No. All right, let's take a look at this Euro USD because we know the dollar has been moving to the upside, and this has not, right? So this is making sense, right? That we saw, Ryan saw that evening star a long time ago, right? And the potential for that crown, but we're moving back down to that 107.24. So this is going to bounce a bit. Still haven't gotten, right, a solid break. It keeps moving lower on this 1 hour. So done nothing with it. Right. See how it just keeps moving lower in the zone. This was ideal at the 61.8, but how we were talking about, hey, we want to see a little additional confirmation. We haven't gotten it to break above that trend line yet, right? If you're limiting in at the 61.8, that's your trade. If it stops you out, it stops you out. It's all good, right? It's all good. Take the shot. But I haven't gotten a break above that level yet. And you see how we went back below that 108.78? Right, so that just continues to move down within our AB boundary for a deep correction. But if we can get a reversal out of it, it'll be a beautiful play. So let's see how long it continues to sustain itself to the downside. If you're in it at 61.8, then you're just in some drawdown right now, right? But you still haven't taken out your A, so you still have a shot. We know that DXY has been bouncing back and forth, right? We're seeing some strength today, yesterday, but we'll see. Never know with that dollar right now, what the market's going to do with it. Any questions on the Euro USD? No, no, we're good. Okay. So real quick, let's jump down. We'll take a look at this this dollar yen setup. We won't get a chance to go through all of them that went in our direction, but we'll take a look at this dollar yen scenario that played out for us here. Okay. Okay. That got close, right? Secure the bag on that, right? That's closing in. And eventually turn back over. But hopefully at this point in time, right, you've secured some of the bag. That's 250 pips to that TP1. Okay. So we're getting a reaction back to the upside now. May turn over and move lower. But at least I hope, right, if you've held this for as long as we've had to hold it, that you've taken some money off the table on that dollar yen. Okay, but that's beautiful correction, right? So that came within 20 pips of target. Okay, don't be greedy. Take some money off the table. All right, so that's the dollar yen. Looking in, I want to take a look at this GJ. So we're wrapped. Oh, had this on a couple of time frames, right? But we're looking at that double top, right, off the weekly. And we had spotted, right, this setup on the 30-minute. Okay. So that I know some people think we're checking it off the 1 hour too, but this was a monster, right? 253. You got the pound holding. You trade your 30-minute chart. You're trading C to Ds. This might be getting ready to move, right, for a C to D push. Okay. So look at that. Right? The market moves up, down, and sideways. We hit our level, it moves sideways, and then it moved down. TP2, that's a 61.8, and look at the explosive move that we have coming off of that. So if I'm looking to get long on that, I'm looking for a pullback and a continuation, right? So we can see here, this is reflecting the move to the downside. That's why you have these down ABCDs on the 15, right? But what I would do I'm looking to get long, so I would say, okay, here we are. Like so. All right. We're taking out some highs. See? What I want to see is if I can get a pullback. Continuation long. Okay. Like so. Okay. If we move down to a 5-minute, you can see how this is it's taken off to the upside. Okay. So what we need is a swing high to form eventually. May not form there, but then we need a pullback and a continuation. Okay. On the cloud, what time frame? Move it back to the 15. On a 1 hour. Okay. Ooh-wee. That's looking decent. Right? If you trade C to Ds, right? So we've seen this now coming through these pairs that we covered today. If you say I want a 1 hour and I want to trade C to Ds, right? This would be your play. If you're saying I'm bullish against the yen, I'm bullish the pound, this is your play, right? It's as simple as that. It's as simple as that, and you let it go, right? So we're not there yet. We know if you're playing that cloud, you're gonna catch it late, right? Through it, but you're gonna get the bulk of the move to the D extension. So if you're using a cloud confirmation, you're not quite in on that yet, okay? But if you get long, right, here's my stop. And if you're long out of the zone, this is my stop, okay? Now, if you wait for a cloud break, you may wait for it to break through, and you may put your stop below the clouds, kind of like putting your stop below the sea. All right. But right now, we came in at a low where that got deep corrections on this. So what is this? We're just shy of that. All right. So you can set that target, that upside target at a 127, right? Or 161.8. Okay. Both of those are decent long-term targets. I think it missed that 786 by just barely. So your projection would be at 1.618 on that. And you can always use that 127 or the beat boundary. You've got the daily and weekly resistance levels there. You can use those as landmarks to kind of decide when you want to take some money off the table and let the rest run, but that's where we are with that. On the 15-minute, you might already have a break. It's getting there. So let's be patient, see what happens. We know we're getting that reaction because of the pound data that came out, right? So, we don't want to be too quick to jump that trade. All right. So that's that. I want to take a quick look at, because we know we were setting up when we marked up these charts on Saturday for like the S&P. We were saying, hey, we may be due for a correction. We were due for a correction. Right. So there is your 80-20 zone on the S&P. We got price pulling back now off that 236 area. And so we'll see if price wants to continue to turn over and make lower lows and lower highs into the zone for the S&P. So that's the S&P on the 1 hour 80-20 zone. Okay. And again, all right, we got the correction. See. If we take a look at quickly at the NASDAQ, okay, we'll wrap things up. We've got a correction. Okay. Can't make this stuff up, everybody. That's an 80-20 and TP1 on the NASDAQ. Okay. If you're looking to buy it, see if you could turn over and push lower into the buy zone, maybe even come down to that 17,000 level. Okay. That would be a decent level for a long if we can get back there on the NAS. So if you trade indices, that's where we are. We approach the market the same, it doesn't change. Okay. Okay. You know, we hear the stories about, hey, this pair has a certain tendency, it has a certain, I don't know, they talked about pairs like they're people. Right? I don't know, but it's the price action does the same thing. Right. Anything before we wrap things up, Seth?
Bro, great session, man. I have a couple of blog posts that'll be ready. I'll share them in the community once they are set to go. One breaking down the rate statement for the Bank of England, and then one recapping yesterday's events with the FOMC. So, great session, bro. Appreciate you, man.
All right, everybody, have a great day. We'll see you back 6:30. 6:30 a.m. Eastern Standard Time tomorrow for the pre-New York session. Enjoy your day, everybody. Bye for now.
Bye. Thank you.